Investor, the hottest investment show in the world. That's right. I said it. I don't care who knows it. Remember, whenever you're offered any type of investment opportunity, you always want to ask 4 questions to start. Number 1, what is the return on my investment? 2, when do I get that return along with the money that I put in? 3, what is the minimum investment amount needed? And 4, what is the risk, the worst case scenario? We all take our time to go to work to make money in order to eat. We take our money, we take our time, we go to work, we get money so that we can provide. This show is all about helping you let your money make you money so that you can work less and have more time for the things that matter most to you, whether it's your family, whether it's friendship, whether it's travel, whether it's engaging in a purpose greater than yourself. So thank you for watching. I'm super excited about my guest today. My good friend Kelly is on the show. Kelly Wagner, investor extraordinaire in real estate, in stock options. You don't want to miss this show. Everyday Investor continues in a moment. Hey, it's Rav. Welcome back to Everyday Investor. I'm talking to my friend Kelly, and we're going to be learning how to make money in the flip. Yes, flipping real estate can still be done here, and it can be done in 2020, despite the COVID times. If you're watching this, it may be 2020 or early 2021, doesn't matter. But Kelly, thank you so much for joining me today.
Thanks for having me. It's great to be here, Rav.
Yeah, we've known each other for a while from the education outfit that Michael Saraceni and Scott McGilvery run, Keyspire. And it's been, I don't know, how many years have we known each other now?
Probably going on 4 or 5 years.
Yeah, 4 or 5 years, and you've been investing in real estate, and you've been on my show. You've been on the show before. You've also now been, I wouldn't say dabbling. You're kind of daily trading stock options, and you're doing well, making a significant return, almost the same, if not better, than even in real estate. Tell me a little bit about that.
Yeah, that has been a fantastic turn of events for me. About a couple of years ago, I just saw someone speaking, was teaching the subject. I have a background in financial services, but I was in the mutual fund world. I never invested directly in stocks at all, and hadn't done any of that since starting in real estate. I was 100% all in on the real estate. Did some job changes last year, end of December. And then in March, when COVID hit, up until then, I had just been paper trading with the stock options from, the methods that I learned from my trainer. And so when that happened, I thought, well, I guess now's as good a time as any to start with some real money. And it's proven to be very, very lucrative for me. It's been fantastic. I'm really happy to have invested the time in learning, because it does take some learning. That's for sure.
Yeah, absolutely. I mean, a lot of people can make a lot of mistakes and get hurt, and they think that, oh, Kelly can do it, so I can do it. Paper trading means it's a fake account, it's fake money, and you weren't doing that for a few days. How long were you paper trading before you actually put a few real dollars in?
I was paper trading for 18 months. So a long time. And part of that, I wasn't paper trading frequently. I was very busy still. I was working sort of on a part-time basis with Keyspire, and also doing my real estate as well. So it wasn't that I was putting tons of time in the actual trading, but I put a ton of time into I was in classes, like I was in workshops and learning different strategies and different techniques and things.
Yeah.
Paper trading is great for anyone looking to get into stock options, because it's really important to know the fundamentals and train yourself to be moderated and be regulated with your investing, so it doesn't become an emotional thing. It's something that you really have to learn well to do well.
Yeah, I think it's a necessity to practice and start small, and it's because, like I say, it can be a very dangerous thing. Options, I think over 90% of it is very, very, very risky, and there's a small portion that it can be you can be very conservative in, and you can, if you lose a few bucks, you know how much you're, losing, and so on and so forth. But maybe
most people are, when they're in options, when anytime you hear about options, or if you read a book about how options work, it's always from the buyer's perspective. So it's a very different way that I trade, and I think you're familiar with as well. So it is important to understand the risks that you're taking on, and we call it's gambling with a brain is what that is. Quite frankly.
Yeah.
So,
I assume you don't buy. I don't buy.
No.
We try to imitate some of the biggest and best companies in the world, insurance companies that just sell insurance. And so we're selling options to people, and we collect the premiums, and that's kind of in a nutshell. Obviously, you can go a lot wider and broader, but kind of staying within that realm. And so maybe we'll have to have you back on another show that we dedicate to learning about stock options 101. And but for today's purposes, we're going to be talking about real estate investing. And I know you have some, properties, but you've done one recently with a mutual friend of ours, your business partner, and he always says, "Rav, don't tell people about me." So I won't tell anybody about Mike Cordero.
Can you bleep that out?
But no, he's such a great guy. I love him so much. We talk about spiritual things. We talk about our family. We talk about our children. And yes, from time to time, we talk about making money in real estate, because that's fourth or fifth in our priority list, as I know it's yours as well. But talk to me a little bit about what we're going to be looking at. We're going to take a break here in a few minutes, and we'll look at the numbers, but talk to me about this latest flip. Where is it? When did you do it?
Sure. So this is a flip that Mike and I did in the spring of 2020. So April of 2020 is when we took possession. It's in Stratford, Ontario. So I've been investing there since the beginning, since I started investing about 5 years. And Mike and I started doing more together this calendar year, because I agree. He's a great guy. We've always gotten along really well. And he and I both have some complementary skills, which I think is something important in any business partnership, whether it's real estate or otherwise, is to partner with someone that has skills that are different but complement yours. So this was a flip that we did. We're looking primarily for off-market deals, but surprisingly enough, this one actually was on the market, which is rare to find a flip that works for the numbers we want anyway these days. But it was great. Yeah, it was the fastest turnaround time that we've had on a flip. And more so than that, it was the least work that we personally had to do on any project. So it was a great deal for us.
Fantastic. Can't wait to hear about it. Let's take a quick break, and then we'll go through the numbers. You're watching Everyday Investor. My guest is Kelly Wagner, and we're going to learn how she and her business partner made some money in the spring of 2020. Don't go anywhere. We'll be right back. Hey, it's Rav. Welcome back to Everyday Investor. We're talking to my friend Kelly, and we're going to learn how she and Michael, her business partner, made money in the flip. Kelly, thanks for joining me and doing this. It's always great when I can have my friends also teach people how to make money in real estate. And you started investing in real estate how long ago?
Just about 5 years ago.
About 5 years ago. And 5 years ago, I mean, now you're just hunting for opportunities. But 5 years ago, what was your spirit? What was your temperament? How were you feeling? Were you a little bit apprehensive, or and being, like I say, a single mom? You had a young boy at the time, not so young. How old is he now?
Not so young. Yeah, he was 16 at the time. He's 21 now, so not so young. Goes by fast. But yeah, no, I was both. I was really excited. I had learned from some really good, experienced investors that really knew their stuff. So I felt very well equipped to move ahead. But it's also super scary. I tell people all the time, I was terrified, kind of, excited and terrified at the same time. It's like a roller coaster.
But once you did your first one and you realized, wow, it's actually quite simple once you've done all your due diligence. And it's like most things in life. Like, if you learn how to do it and implement, then you look back and you say, hey, why was I so afraid? But it's when you don't know. I always say that knowledge, it mitigates risk. Knowledge breeds confidence.
Absolutely. I just used those exact words with someone else the other day. Knowledge brings confidence. And that's exactly the case with this. When you do anything, after I'd done a few different deals, a few different flips, it becomes.
So talk to me about the strategy of the flip, because we can watch our HDTVs, we can watch our this show or that show, and they kind of make it look so easy. And can you really still do it in the GTA, or in your case, and we'll look at the location, but a couple hours west of Toronto, like, can it still be done on the education curve of investing? I mean, it's not quite like buying a townhouse and renting it out in a demand area. There's a skill set to this, but I also don't want to scare people away from it. So Kelly, talk a little bit about the philosophy of this particular strategy, and just your personal thoughts. There's no right or wrong, but talk to me about the flip.
Yeah. As a general rule, some of the things that you have to keep in mind about flips is, obviously the basics, which is that you have to get the property for a decent enough price that, based on how much money you have to put into it, you're going to still be left with a profit that makes your time worthwhile. Because when you sell it, typically you're going to have, realtor fees coming off the top and legal fees and so on. So there always has to be enough margin in it to make it worth your time. And the extent of the reno is obviously going to impact how much time you're going to have to put into it. Is it a complete gut job back to the studs? Or is it just, lipstick on a pig, we call it, is it just a quick cosmetic update, so that will influence the decision. And generally with a flip, I mean, there used to be, and somewhat still is, but I find less so now, a bit of a seasonal factor to that. Typically you see the housing market really heat up like crazy in the spring, through April, May, June, the housing market is hot, 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 prices are up. And then it used to, not so much anymore, but it would get quieter in the summer when people were off busy doing their summer fun things. And then, warm up a little bit, get September, October, and then it would kind of quiet down for the winter and people would wait to list their houses in the spring market. It's changed a lot. The last few years, even, the housing market, not just in the GTA, but all the surrounding areas, that's really changed. And we didn't see that last fall. We didn't see the housing market really slow down at all. It just kept going full steam November, December.
Yeah.
So with flipping, that the seasonality and the seasonal cycles of real estate are something that you kind of want to be mindful of. But again, that always depends on the area that you're in, and we're not really seeing any slowdowns on that front.
Yeah, I mean,
at this point.
And I heard a couple of things that are really, really important. One, you do have to buy it undervalued for it to make sense usually. If you're going to flip.
Yes.
If you're going to flip, you almost, have to kind of be able to buy it and sell it as is and maybe make $1.
That's exactly one of the things that Mike and I look for when we're looking at any property, whether it's an on-market or off-market deal, is can we buy it for a price where, without touching a single thing, could we stick a sign on the front lawn the next day and sell it for more? Yeah. And sometimes, you think, well, how could you do that? Why wouldn't the original seller sell it for that price? And oftentimes, there's the kinds of flips that we find work best for us are when we can come in and help someone that's, for whatever reason, gotten themselves maybe into a financial pinch, or maybe there's a marriage breakup and they just want out of the house ASAP and they don't have time to wait for a 45, 60-day closing for a regular.
Or maybe they're a collector and their house is filled with things and it's too hard for them. There's too much anxiety to show the home, and there's all sorts of reasons why. So in this particular one, did we buy it off market?
No, this one was actually on the market, surprisingly, but the realtor that listed it was actually a Toronto realtor that listed it, and the property was in Stratford. And this was a special case, though, and this is how it came on the market, was unfortunately, the owner of the property had gotten themselves, I guess in a tight spot financially. They had taken out a second mortgage on the home, and they had defaulted on the second mortgage, which means they weren't making the payments on the second mortgage. They still had been on the first mortgage, but the second mortgagor, the lender, didn't want to wait any longer for their money and their payments. So they legally have the right to start, the forced to sale proceedings on the property, just like the first mortgagor would. And so because of that, it was the lender that was actually selling the property effectively. So they didn't care about making a profit. And quite frankly, they were probably ticked off, I guess, with the seller. And so they just wanted their money out of the deal. And they didn't care if there was any profit left over at the end of the day. So the property was listed, well under what you would normally get it for on the market.
So what did you purchase this property for?
So we bought this property for $170,000.
So you bought it for $170K, but the value, in your opinion, would have been what?
Just as is, without touching anything. I mean, it was in rough shape, but we probably could have listed it in that city for probably $220,000, $230,000, just as is.
Wow. So so you already, without doing anything, there was a difference of about $50,000, but you're saying it was a power of sale, and so the lender wanted their money that they lent out, and okay, very, very interesting. So you bought it for 170. This is what? It's a townhouse, a detached. It's what is it?
It's a detached, one-story, single-family home.
Okay.
And yeah, effectively, between the first and second mortgages, it was probably just under, I don't know the exact number, but I want to say, $150,000 or something that the owner owed on the property. So they were listing it at 170, so that after the property sold, and the realtor fees and legals were paid out, there was still enough left to pay off the lenders. So that's why it was listed at that price. But it was basic starter home. It was a little bit unusual in that most properties in this area of the country anyway, Southwestern Ontario, have basements, and this one doesn't. It was just a very small crawl space.
Yeah.
Most of the house, of which there was not, you couldn't get down there except for at the back where they had put an addition on where the bathroom and laundry room was. So small single family home, 800 square feet, quite small, but really cute. I love small things.
So then with the 170, did you pay the full 170 just to have it, or did you get a mortgage on it?
No, that was the other interesting thing about this property. And, I feel bad for whoever owned it before, but there wasn't actually any heat source in it when we bought it. I don't know if the previous seller just somehow, out of spite or something, took it out. But because there's no heat source, you can't get a mortgage on that. So Mike and I closed with money, 100% cash close. That was about 50% our own funds and 50% was borrowed from private lenders.
Okay, and we'll factor that in a second. So you paid 170 plus closing costs?
That's right. Yep. So our closing costs on that were $4,115.
Okay.
And that includes land transfer taxes and legal fees.
Is it okay if I put 175?
Yeah, sure. Yeah.
I know you probably have your number set on what you just said, but it was 170 plus 4,000 and change for closing costs. So that brings us to 175. You borrowed, how much did you borrow from somebody?
Well, the reno costs are on top of that. So the total reno and carrying costs in that were just under $69,000. So
69?
the total of, if you add the 175 with the 69,000 of renos,
I'll put it just for my really slow brain.
Okay.
I'll say 70,000.
All right. Let me get my calculator.
So that's 245. Yeah.
And so we borrowed about 122 of that.
And you borrowed some of that. And what interest did you pay?
That was from a couple of different lenders at different rates, but the blended rate was about 11%. And
is that worked into this number?
No, the interest that we paid is included in that 70K figure.
Perfect. So yeah, so your interest paid and 11%, by the way, on 100. I mean, you paid a good 10, 15 grand, but that just makes sense. You borrow money to make money because it's a lot easier to do. So you're all in for $245,000, yes?
Yes, but although 1.0 in this case, that would have been the annual rate of return if we had borrowed for the whole year, but this one turned around in 3 months. So it was just over $3,000 that we ended up paying in interest. So yeah, we'll go through that in detail, but yeah, it turned around fast. It was primarily a cosmetic reno, so not really a lot of structural things. The big structural thing was the floor. It's an older house, and so the floor was uneven. So we had to kind of level, like sort of shim up the floor and re-level it before we put the new flooring on. But other than that, it was quite fast. So we didn't have to have that private money in place for very long.
Okay, so purchase price plus closing costs, $175, reno $70, $245 you're in for.
Yes.
And then you said this took 3 months.
It took 3 months.
And what? Yeah, go ahead.
Oh, I was just going to say, I don't know how much you want to break down that 70 grand, but that also, our renos actually weren't that much. The included in that are like the realtors and legal fees when we sold it. That's basically all of our costs is the 70 grand.
Renos plus fees.
Plus fees.
No, I just want to inspire. We don't have to break down every single dollar. I want to inspire. I want to people to be inspired as I'm inspired. That Kelly, we can do this. We can do this. You know, in the spring of 2020, right when you close this, right when all the municipalities closed down, when the world closed down, you opened up and started. You know.
Yeah, it was, it was definitely something we thought about. Like we actually put the offer on the place on April 5th. So we were only about 2.5, 3 weeks into everything being shut down and nobody knew what was going to happen. So, yes, you get more comfortable with taking that stuff on as time goes on and you know your numbers and so on. But it was still like, this was a total unknown new thing for us world pandemic wise. So, but yeah, we did it, closed on it April 29th. So
we sold it 3 months. We sold this 3 months later at what?
320.
320. Nice.
320,000.
So 320K, and then we minus what we're in for. So if you have a calculator there, what did we get out of this?
After all expenses, we walked away with $75,000.
$75,000. So that was your profit. And we don't need to know the ROI per se and what you were in for. The point is, So you and Michael made $75,000 in 3 months. That is fantastic. And I know Michael and you can do 2 or 3 of these at the same time if you wanted to, because it wasn't you with a hammer and a hard hat. You outsourced that and all these kinds of things. So Kelly, this is phenomenal. We're out of time. Any last words of encouragement for people that say, hey, I know Kelly and Michael are very smart people, but if they can do it, maybe I can. What would you say to that person?
I would say absolutely run your numbers. Anyone can do this. Is kind of grade 5 math, right? Addition, subtraction. That's obviously oversimplifying. But when you have good crews in place, good construction crews, that's not our specialty, doing the hammer and nails things. But if you run your numbers and be conservative, we always coach people to be really conservative with your numbers. Overestimate your renovation budget, have a good contingency in there. Underestimate what you're going to sell it for at the end of the day. And if you're still looking okay, then go ahead.
Perfect advice, Kelly. Thank you so much for being on the show.
Always a pleasure, Rav. Great to see you.
You too. And thank you for watching at home or listening via podcast. Without you, we would not have a show. So grateful. Make sure you tune in next week. Same place, same time. Honey, I love you. I'll be home soon. Thanks for watching, everyone.